When you start using this indicator to trade, you will start seeing higher profits than you will get from a normal MACD indicator. And in this video, I will be teaching all the concepts surrounding this indicator and the various strategies that we are going to be applying with this indicator to make huge profits from the market. I like to take my time to explain everything step by step so that everyone can understand it completely and make profits from it. But before we get into all of that, do well to like this video to help other traders find it and also become profitable, and subscribe to our channel. If you are new here, Trading Tribe is your new home. So my tribe soldiers, let's get down into this business. Now, here we have the MACD indicator, and we all know that it is one of the most famous and oldest indicators ever created and is widely used among beginners. But what if I told you that there is an adult version of this indicator that is proven to be almost 4 times more profitable than the normal baby MACD indicator? Now, we are all familiar with the concepts of the normal baby MACD, how it helps us identify potential trends by displaying crossovers between 2 lines. So when the blue line crosses above the orange line, it shows us that the market is potentially uptrending and that it would be a good buying opportunity. And if the blue line crosses below the orange line, it shows us that the market is potentially downtrending and that it would be a good selling opportunity. Now, this may seem like a good and simple strategy, but the common problem with the strategy is that it only works in trending markets, and as we all know, the markets are not always trending. It can also move sideways or within a range like this, and because of that, the MACD indicator would perform bad during this type of market. Like in this example here, we can see that the MACD is crossing upwards, which supposedly tells us that an uptrend is forming. But because the market structure is moving sideways, it gave us a false signal and the market did not go up as expected. Now, as time goes on, these false signals could accumulate and slowly wipe out our profits and could even bring your account into a negative. But what if I told you that this new adult version of the MACD indicator could also help us identify trends, and at the same time eliminating those false signals for us when the market is ranging, therefore minimizing our loss and increasing our profits? This indicator is called the Impulse MACD. It is similar to the old MACD, and it is also a momentum indicator that could detect trends. But it has its own unique features. The difference is that, unlike the normal MACD, which displays multiple false signals when the market is ranging, the Impulse MACD filters out these false signals and goes completely flat, as you can see here. And so because of this unique feature, you are now less likely to get trapped by these false signals. And now, I am going to show you exactly how to apply this indicator into your chart, how it works, and the different strategies that you can use. Now, the first thing to do, of course, is to apply the indicator into your chart. It is not available on MetaTrader 5, so we are going to be using TradingView. And once you've opened TradingView, either through the app or the website or the software, you go straight to the indicator section and you type in Impulse MACD and choose the one by Lazy Bear. And once you have applied the Impulse MACD, we want to change the appearance of the indicator so that it becomes easier to look at. And to do that, you click on the indicator and go to Settings. Then you click on Style and follow this exact settings that I created. I will leave it here so you can copy that later. And after that, as you can see, the Impulse MACD now looks much more organized. Now let's take a look at the components of this indicator. Now, similar to the normal MACD, this indicator also has 4 components. First, we have this green line called the impulse. Then we have this orange line called the signal line. And then we have the histogram. And finally, we have the middle line. The truth is that you can actually use any color of your choice, but make sure it is something that you can easily understand. Now, how do we use this indicator? So, very similar to the normal MACD. The way we identify trends on the market is by looking at the crossover between the impulse MACD line crossing above the signal line. It indicates that the momentum is going upwards, and if the impulse MACD line crosses below the signal line, it indicates that the momentum is going downwards. However, if the two lines go flat like this, it indicates that the market is ranging or moving sideways, and you should avoid taking any positions. Now let's move on to the different strategies that you can use with this indicator. Now, this next strategy is a little bit more advanced, but it also has a higher win rate. It's called the impulse MACD extension, and this is how you trade it. The first step is that we need to manually add overbought and oversold levels on the indicator. So you will manually add lines on the indicator. And so this will be your overbought line. And for your oversold line, you do the exact same thing, but in the opposite value. So the reason we apply these overbought and oversold levels to the indicator is because we want to make sure that we only take positions from crossovers that happen outside of these overbought or oversold levels, because this means that the price is overextended, and prices that are overextended will have a higher chance of making significant moves. And now, you may be wondering, Trading Chief, how do I determine the exact placement of these lines? So here is how you do it. First, let's start with identifying the placement of our overbought line. So you zoom out, and now, immediately we can see that there are two types of crossovers that happens on the indicator. The first crossovers are the crossovers that happen further from the middle line, which are called the major crossovers, and we also have the smaller crossovers that are happening close to the middle line. These are called the minor crossovers. Now, what you want to do is to separate the major crossovers from the minor ones by drawing a horizontal line, and so the minor crossover should be contained below the line, and the major crossover should be contained above the line. Again, the reason for this is because we only want to take positions from these major crossovers and ignore the minor ones, and so this will be your overbought line. Now, for your oversold line, you place it at the opposite of your overbought line. So since your overbought line is at this value, I am going to place it at the negative of that value, and so this will be your overbought and oversold levels. Now keep in mind that these values are not fixed. You can always adjust these lines depending on the crossover placements and depending on the different market conditions. So if you want to use this indicator on another pair, you would need to adjust to a new overbought and oversold levels based on the market conditions of that pair. Now that your indicator is ready, here is how you trade the strategy. So first, for your buy signal, you want to only take positions if the impulse MACD crosses over upwards, but the crossover needs to happen below the oversold line. Same thing for your sell signals, but in reverse. You only take positions if the impulse MACD crosses over downwards, but the crossover needs to happen above the overbought line. Remember, crossovers that happen between the lines like this will be ignored. This is because we want to make sure that we only take positions if the price is overextended. So let's look at a couple of examples using this strategy. So in this setup, we spotted a crossover upwards on the MACD, while the crossover is happening below the oversold line, indicating that the price is on a downwards momentum while being oversold, and so this will be a valid buy position. And when you spot that, then it's time to enter a trade. And then for your risk management, you can set a stop loss below the nearest swing low and a take profit target at least at times your stop loss. And as you can see here, this trade ended up being profitable. Now let's take a look at another example. So here we spotted a crossover downwards on the impulse MACD. However, as you can see, this crossover happened inside the lines, meaning that this signal will be ignored, because again, we want to make sure that the price is overextended. Next, we spotted another crossover downwards, but this time it happened above the overbought line, meaning that there is a downwards momentum, while the price is overbought, and so this will be a valid sell signal. Now, for your stop loss, you can set it at the nearest resistance level and set your profit target at least at times your stop loss. And as you can see, this trade was a successful one. Now, another advanced strategy that you can use to make money with the impulse MACD indicator is by using it to hunt breakouts. Now first, let's start with the definition. For the sake of the beginners watching this, a breakout is when price makes a sudden and significant move towards one direction. And if you could take advantage of these significant moves, it could result in a massive profit with minimal risk. And so, a common pattern that mostly happen is that the breakouts tend to form after a long period of ranging or sideways market. And by using the impulse MACD ability to identify these ranging markets, we can use it to our advantage and find breakouts before they happen. So here is how you trade the strategy. The first step is to find a ranging market. And how can we do that? We can do that by waiting for the impulse MACD to go flat, as shown here. However, you also need to take into consideration the length of the flatness. Listen, we only want to use signals where the impulse MACD goes flat for a long period of time. We do this to ensure that we don't get a false signal, because the longer the market stays within a range, the higher the chance that a breakout would happen. Now, once you have identified the ranging market, the next step is predicting the direction of the breakout, if it will happen to the upside or the downside. The way you know this is by looking for the signs of rising momentum, as shown by the histogram. Now, let's look at an example of that here. So here we can see that the histogram has been flat for a long period of time, and after that, it started rising slowly towards the upside, as reflected by the price also going upwards, indicating that the overall momentum is bullish. Which means that based on this example, we can conclude that the breakout will likely happen towards the upside, and so this is a good opportunity to take a buy position. Next, you also need to make sure that your risk management is on point. Now, because this is a breakout strategy, it means that it can have a high profit potential while maintaining low risk, which is why for stop loss, you can set it just slightly below your entry position right here. And as for the take profit target, you can set it slightly higher, or at least 2 times the size of the stop loss. And as you can see, this trade ended up being profitable. And now, I just revealed to you a lot of impulse MACD trading strategies, which have some more advantages over the normal MACD indicator strategy, something like the breakout strategy and the rest. And these strategies you can easily implement and trade right now. But if you want to learn the raw and simple trend following MACD indicator strategy, in this video I taught the best and easiest MACD indicator strategy in combination with another powerful indicator in order to identify strong market trends, follow the trend, and make a lot of profits from the trend. If you want something easy and powerful, then this is the strategy for you. We are the Trading Tribe, and it's a wrap for this video. See you in the next one.